Good morning, everybody. Welcome to the Art of Financing Your Business. So we have with us we have a moderator that just retired from the SBA. And then we also have ECDI, which is a micro lender, Consumer National Bank, which is a traditional loaning institution, as well as someone from the SBA. But before we start, just a couple housekeeping items. Number one is um, there's really no PowerPoint to share on this since it's all discussion. So we are recording it, and we'll be posting a copy of that recording on our website later today or before the end of the week. So if you need to use it as a reference point, feel free. Please use the Q&A feature or the chat feature if you have any questions. We will kind of answer them as we go. Lastly, there's a 2-minute survey that you'll be receiving that kind of will give us a hint on how we can improve our webinar process. My name is Ed Cook, and I am a SCORE counselor at the Canton chapter, Canton, Ohio, that is. For those of you that aren't aware, SCORE is a national nonprofit organization that began back in 1964. Since then, we've grown to over 200 chapters and 11,000 counselors like myself. And besides sponsoring educational workshops like this, we counsel small businesses, and that's really what we're about. So if you're thinking about starting a business or you have a business that isn't quite running up to your expectations, please give us a call. You can see our email address, our website, as well as the phone number. Please call us so we can help you. Our counseling is free and it's confidential. So we do, like I said, we do startups, we do existing businesses, for-profit, nonprofits. We're here to help. Locally, we're funded by the Stark Community Foundation, the Hoover Foundation, Stark State University, and we are a resource partner with the SBA. Locally, we have about 32 counselors, and they each have a unique business skill set. Our offices are located in the Stark State University Business and Entrepreneur Building. Those of you that are in other states or other cities besides Canton, I think if you would go to the score.org website, there should be a spot there where you can request a mentor, and that appropriate chapter would be reaching out to you. With that, we can get started. I'm going to introduce our moderator. Gwen, can you flip the slide, please? Mark, we're very fortunate to have Mark as a SCORE mentor. He's worked with the U.S. Small Business Administration for a number of years. He's a terrific resource for us. So I'm going to turn it over to Mark, and then Mark will introduce you to our panelists. So I hope you enjoy the webinar.
Thanks, Ed. I really appreciate the good, kind words there. And yes, my name is Mark Hansel. I'm a SCORE mentor with the Canton Chamber. Recently joined them, and prior to that, I was employed with the United States Small Business Administration, Cleveland District Office, and I was there for 28 years. I started as a commercial loan specialist, underwriting loan requests coming into us from our lenders, but then transitioned to what's called a lender relations specialist and had an assigned territory where I worked with SCORE, SBDCs, lenders, etc. And it was a very good job in my view. We're fortunate to have a great group of panelists with us this morning, and their comments will serve to enlighten you. We have Scott Lawrence from Consumers National Bank, Consumers National Bank is an active SBA lender. Uh, they are a PLP and express lender with the agency, and Scott can tell you more about that. And we also have Jim Pettit with ECDI, Economic and Community Development Institute. When I was at the SBA, I used to make a whole lot of referrals to ECDI. They are a micro lender with the SBA, and they're able to deal with businesses that really need a little extra push, so to speak. And then we have Tom Sangrick, and I worked with Tom for years at the Cleveland District Office. He's still on board with the SBA, and he can bring you up to speed on current policies with the SBA and what's going on there. So, with that, Scott, did you want to talk about consumers and what you're doing there?
Yeah, good morning, everybody. As Mark had mentioned, my name is Scott Lawrence. I am a vice president and a business development officer here for Consumers National Bank. For those of you that are from Northeast Ohio, Consumers is headquartered in Minerva, Ohio, which is just southeast of Canton on Route 30. We were founded in 1965, and we are celebrating our 60th anniversary here this fall. We're a $1.2 billion community bank that focuses primarily in the 5 counties that we serve, which would be Summit, Stark, Harrell, Jefferson, and Columbiana. But outside of those 5 counties, we do business in 23 counties, as well as Western Pennsylvania and Northern West Virginia, doing all forms of commercial, consumer, direct and indirect auto lending. Our bank has a pretty wide grasp on everything that we do, and we are committed to being independent and locally owned.
Thanks, Scott. And now Jim Pettit from ECDI, Economic and Community Development Institute.
Good morning. Can you hear me, guys? Can
Yes,
you hear me okay?
we can hear you,
Good.
Jim.
Okay. I'm so used to being on Teams now that I have to download the Zoom app on here and do the settings on it because I had a heck of a time getting the microphone working. Well, anyway, so ECDI, it's been around 20 plus years. They're the largest micro lender with SBA in the country. We mainly work in Ohio. We do a little bit in Kentucky and a little bit further down south, by Cincinnati. A little overspill with a couple business owners, but the thing about ECDI that I like is, we work with the underserved and the underbanked, and we're a nonprofit, so it's not about us making a boatload of money. It's about helping business owners, and my background since '85, I've been in commercial lending, and I started a commercial brokerage, and I built that up to I had 35 employees for close to 17 years, and had well, quite a bit of success, a little bit of failure. I've built businesses, sold them. I've lost businesses. When you're in business, sometimes you roll the dice. Made some good choices, made some bad choices, but I've been around the horn. Worked with different banks with Huntington, and 10 years with Savista Bank, and a couple others along the way. So I've been in lending pretty much all my life, and I enjoy working with people, coaching them. The difference, if you look at a politician a lot of times makes big decisions for city, state, local, and federal, but they don't have, they're politicians, basically. They're not business owners. They don't have that business experience. And the thing about me is not only am I a lender, I'm also a coach. I have a lot of business owners pick my brains. I've worked with business owners that do 200 to 500 million a year, all the way down to just starting out. I had one fella, very complicated. He had 250 LLCs, if you can imagine. Imagine calculating the income on that one. So my thing about ECDI is coming over here is I want to give back because I've been doing this for so many years. And a lot of people that we work with, they do need that coaching. And I don't care where you are in life, you need a coach. I know guys that make, mega millions a year and they still have coaching because they want to get better, and I've been coached by some of these guys you might know, Rick Ruby, Michael Gerber, he wrote the E-Myth, Dan Kennedy, Jay Abraham, John Maxwell. It's good to have a coach in your life. I don't care where you are. It's good to have accountability. And so the thing about ECDI is we have three main programs. We have the SCORED program, we have the microlender program, then we have the what we call the community advantage. And right now we've got a fantastic thing going on right now. It's our spring special. We got about $1.1 million that we're lending out. Are you ready for this, guys? 2% interest rate on a 3-year payback. And you got to have at least a 615 credit score. You're not going to see that at many local banks here in Ohio. Let me tell you that much. But so that's a nice program. For a startup business, you can get 5,000, and for a business that's been around at least 12 months, you can get 10,000.
Hey, Jim, can I throw a question out for you?
Absolutely, sir.
Um, we have registrants from about 7 different states. So do you do any lending other than in Ohio yourself?
No, I mean, right now, I mean, I'm with ECDI, and that's mainly what I'm doing.
In Ohio?
Yeah, in Ohio, yes, sir.
Do you have resources in other states that do something similar to this?
No, sir, not to start up, There's,
But what about existing businesses?
well, let me give you an example. You guys have heard of the merchant cash advance programs, MCA programs, where these business
Jim,
owners,
that's where you basically sell your receivables.
yeah, that you can do receivables, you can do bank statements, you can do credit card statements. But what they do is they lend on your cash flow. They pull the money out automatically, and a lot of those programs are ripoffs. They're high interest, high fees. I try to a lot of business owners that I talk to, I try to get them to, stay away from them.
Hey, Jim,
Go ahead.
if you were talking to someone in Michigan, just as an example, where would you tell them to go for a micro loan? Or this applies to you as well, Scott. Is there banks in Michigan that you would
Well,
send them to?
what you want to do is you want to have them look up a CDFI that's set up through SBA, and
CDFI means what, Jim?
basically a community development lender. So basically, it's more like local to their area that they're lending in. And so, like with the CDFI, there's different. Like we don't loan to nonprofits. Some CDFIs loan to profits and nonprofits, but we loan to a profit business only, for profit. But a lot of CDFIs get money from all different sources. We get money from SBA, we get money from the state of Ohio. We have banks that give us funds, basically to lend out at a low interest rate, to basically help the local business owner and the startups and so forth. And so I would say, just do a search on Google or DuckDuckGo or whatever, for your local CDFI and see who's available. Some of them are going to be different. So some of them are not going to be very aggressive as far as their lending. They might not be as aggressive in their startup capital. I've never seen anything like this, what we do over here. I got a guy approved for 20,000, and you might say, well, 20,000 doesn't sound like a whole lot of money, but he'd only been in business for like 20 minutes. I mean, he just opened the door and, we're good. But he had a good score. He had a great business plan. He was registered with the Secretary of State, had his EIN, nice business plan, good cash flow analysis, and we lent him 20,000. He actually could have borrowed 30 if he would have wanted it, but he only wanted 20. And we have a scored program for existing business owner 2 years, unsecured. This is amazing, unsecured, with a 720 score, up to 50,000. I just got 2 of those approved last week. So it's with the government, with the new administration, we've had a couple hiccups, a little bit of slowdown because of some of the uncertainty of some programs being frozen temporarily, some programs being discontinued, some programs are going to stay there, but they're again, and I don't want to get political, but they're basically trying to cut the fat and make things more manageable. But the uncertainty with us, with some of the funding that we have, it's taken us twice as long to fund, but we're getting stuff funded. Right. So hopefully that'll answer your question.
Yeah, that's great, Jim. Thank you very much. Scott,
Is
what
Tom
about
Sandrick
you?
back on the line?
Oh, yeah, I'm here. Yeah.
Hey,
Tom,
Scott.
We had a question from a lady in Michigan. Maybe you could put your email address in the chat and find out who the micro lenders are in Michigan. And Tom, why don't you talk about yourself since you're on the line now?
Okay. Well, I'm from the SBA Cleveland District office. We might be called the Northern Ohio office here, but been here a while. Like, I'm a lender relations specialist, work with local lenders so they can do more SBA loans. I work with organizations all around that to support small business, local, state, federal people that try to help out, basically, try to, help small business owners, entrepreneurs, make more loans through our SBA programs. Mark, should I tell them about our programs? Do they know about them, or?
Yeah, just give a brief rundown,
Okay, well,
what's going on.
Well, basically in SBA, we support small business. We try to provide loans. We provide, counseling through the SCORE, Small Business Development Centers, try to provide them with help getting their, business plans going, and then help along the way, advice. And then when they need loans, they could maybe get an SBA loan. An SBA loan.
Tom, that's not a direct loan, right?
No, it's actually through a lender, a bank. That's why we need our friendly bankers all around to actually make the loan. Like we got Scott on the line there, actually make the loan, and then SBA guarantees it. So SBA is kind of a co-signer, guarantor on the loan. What that guarantee means is that if the loan doesn't work out somehow, SBA will reimburse the lender the guaranteed portion. It could be 75%, 85%. Some programs are 50%. Because of that, the bank's able to take more risk, do more deals, because they got that SBA in the background kind of supporting them if somehow it doesn't work out. So the lender can, make more maybe startup deals, maybe more type of businesses that bankers shy away from because maybe, it's, you don't know if, it's going to last. Restaurants are always considered more risky, lounges, things like that. But on SBA loan, we can do those type of businesses, hotels, whatever. During COVID, I mean, nobody was going to eating places or hotels and stuff like that. But, with our program, we support, businesses, good or bad times, so sometimes we actually help more in bad times. If you got one of those PPP loans during COVID, payroll protection loans, or one of those EIDL loans, SBA gets involved in this disaster loan program too, which is hurricanes, tornadoes. But during COVID, we did these EIDL loans, economic injury disaster loans, like 400 billion of them, so maybe you got some out there, 30-year loans, help out during, the COVID period, and there's still a lot of them out there. So we have our regular programs through, like I said, through our local lenders. And, you know, we work with all the local lenders. I mean, you know, it could be our top lenders, you know, the Huntingtons, the key banks, like Consumers National that Scott is on, you know, represents. So we work with, you know, sometimes credit unions. So like I said, our loans are basically through lenders, and we're kind of like in the background supporting, you know, supporting the deal and supporting the economy. We try to do loans for exporting companies. Got programs for that. That's actually a 90% guarantee. So like I said, we're basically how an SBA loan can help you, you know, help launch, grow, or repair a business, can start a business, can take an existing business, you know, expand. Also
Tom, do you do nonprofits as well as for-profits?
Basically, SBA programs are for-profit.
Okay.
You know, during COVID, we did the PPPs were for nonprofits and EIDL loans were for nonprofits and disaster, but regular loan programs are for-profit type businesses. A nonprofit can have a for-profit subsidiary, which that could work, but basically the goal is to help for-profit businesses, and they can, you know, earn income and, you know, pay taxes back. So that's why it's for profit, you know.
Okay.
Hey, we've got a question in the chat concerning personal credit and prior bankruptcy. I mean, personal credit does enter into the picture when anyone applies for a loan. Scott, Jim, you want to weigh in on that?
Bankruptcy or credit, Mark?
Both.
So, I mean, credit, you want to try to see that your credit score is as good as it can be.
What range are you looking for?
I mean, I typically like to see 750 plus, but we can go down as low as, you know, high 600s as long as it's clean and there's not a lot of negative information out there on it. Bankruptcies, though, are difficult, and I think that a lot of it just depends on the situation and what occurred during the bankruptcy or the reason why. You know, I know there's some lenders out there, maybe more of the online lenders, that might be as little as 2 or 3 years after a discharge from a bankruptcy. I think our bank typically, and most commercial banks that I know, you know, it's that 5 to 8, maybe as much as 10-year look back period on a bankruptcy. But you know, one of the questions I plan on addressing here later in the seminar is relationships and having a relationship with your banker. And I think that having a personal relationship with your lender who understands your situation, if you've had a historical bankruptcy or poor credit, I think having a lender that understands your background and where you've been might help propel you moving forward with your business and obtaining a loan versus maybe doing something over the internet or over the phone or, you know, with a lender that you don't have a lot of personal contact or relationship with. So, you know, always my advice to anybody is to, you know, keep your credit as clean as you can get it, do what you can to repair it and drive your score as high as it can be. But, you know, for me, it's just making sure there's not a lot of negative or slow pays or late pays on there. We understand that things happen, but, you know, you as a business owner to show your ability to repay loans is driven a lot by your historical credit.
Okay. Thanks,
Jim,
Scott.
did you want to weigh in on that?
Yeah, well, with ECDI, you have to be 7 years discharged, and you can't have 2 bankruptcies within a 15-year period.
Okay. Yeah, and for businesses that are in a startup situation, I guess my advice would be pull a credit bureau on yourself before you proceed in meeting with a bank, so you find out what's there. Now, you know, talking about commercial loans, business loans, just how do you decide, Scott, Jim, as to whether you need SBA support in a deal or not?
So for us, determining whether or not we would obtain an SBA guarantee on a loan that we do, um, would just be that is there a weakness that exists in a loan request that the SBA guarantee, whatever percentage that we would obtain, does that guarantee mitigate some of the weaknesses in the loan? And some of the weaknesses in the loan, typically we at Consumers utilize SBA for any type of collateral shortfall that might occur. Especially with an operating business that's purchasing maybe some inventory or equipment or a piece of machinery, working capital. We use the SBA quite a lot here at Consumers to mitigate maybe even types of collateral as well too. But the SBA guarantee definitely strengthens loan requests from our borrowers that allow them to obtain the capital that they need to either grow or continue their business versus not being able to do the loan. That SBA guarantee really helps small businesses keep the ball moving forward and growing the local economy.
Mm-hmm. Jim, did you want to weigh in as well?
I've been doing SBA loans, standalone SBA loans, for years and years through different banks. And right now I have, and the amazing thing is that there's just mega billions of dollars available out there. And I have one source. They have a software program, and they're like a super broker. They have 50 SBA outlets. SBA is does an amazing job for small business in this country. And, I'm proud to, work with them through ECDI. At ECDI, we have what we call allocation. And so depending on the type of loan that we do, we'll allocate SBA funds for that. SBA, we don't allocate SBA funds for all of our loans, but a lot of times we have 3 or 4 sources of money that comes in, so that we can fund the whole loan. The thing, if you look up micro lending, if you look up the average micro lending loan in the country, I think it's somewhere between 16 to 20,000. And that's pretty much what our wheelhouse is. I mean, we do some good sized loans, 250, 350, whatever, 100,000. But our main wheelhouse is small business, and using some of the SBA funds for those types of loans. So hopefully that'll get a little clarity there. But the monies, and I have a question for Tom, if it's okay if I ask a question. Tom, what do you, with the new administration and everything that's been going on, where do you see the SBA as far as availability of different type of loan programs? Is the 7A going to stay? Is 504 going to stay? Where do you see SBA as far as lending? Let's say in the next year, what's it going to look like? Is there going to be consolidation of offices? What do you see there?
Well, I think our loan programs are still always going to be there. It just brought back the fees. That's not a change there, because we had no fees, $1 million or less, but now they brought that back because it looks like they had some, didn't have enough money to pay all the claims. So fees are back, which was, a big deal. But for veterans on SB Express, military veterans and spouses, 500,000 below going through SB Express, there's no SB guarantee fees. So that's a change. SBA guarantee fees, 2% of the guaranteed portion, and then it goes up to 3%. that's a change. You know, another change is we have new citizenship rules. You have to be like
Yeah.
100% ownership by U.S. citizens, U.S. nationals, or lawful permanent residences. Before you could have some foreign investors in there, but now none are allowed. You know, it has to be all 100%. You know, but you can be also lawful permanent residents too. So that's kind of a change. But like I said, we're always going to be around, and we might make sure we're not, like I said, losing money, or we're tightening up a little bit maybe. But basically, it's kind of business as usual. You know, we're always going to be here, good or bad times, and they're probably going to try to eliminate some waste or whatever, and maybe they'll like in Ohio, maybe we'll have uh one district, and Cleveland maybe a branch office, but we'll have to wait and see. But we're always going to be around, basically. You know, we're here. You know.
Right.
Tom, while I have you here real quick, I have a fee question. Does the fee relief you mentioned to veterans, does that only apply to the express loans, or does that also
Yes,
apply
it's
to
the express
7A
loan.
or other loans?
I looked at it. You got to put it under SB Express. That's a good question, but what it looks like is you got to run it through the SB Express program.
So on a 7A loan, even if you're a veteran, the veteran still has to pay the fee.
I'm going to check on that further, but the way it reads, it says
Yeah.
SB Express. Anybody else know out there, like Mark?
Well, let me jump in and say, SBA basically guarantees loans made by lenders to eligible small businesses. But underneath that broad umbrella, they've got specific programs. And what Tom has brought up is a specific program called Express, but it still boils down to a loan guarantee. And Scott mentioned 7A. 7A is a section of the code that authorizes SBA to guarantee loans. And so out there in the audience, that's what we're talking about here. So I wouldn't get overly concerned about that. So that's where we are. We do have some questions here in the chat. One of our participants says that she's in the process of a new mobile home health care business, and she wants to undertake that as a sole proprietor. She wants to be advised on alternatives, traditional loans, also what sort of documentation she would need to present to a lender, and then also the possibility of grants for her business. So we've got three categories here, at least, of what to do, what the issues are. Responses from our panelists, that is.
I would, I'll chime in on that. As far as grants, you basically have to do research for your locality. Sometimes, there's city money, county money. Sometimes there's philanthropists that are putting money into areas. You just have to research, where your business is in the locality of your business is very important to those types of funds that could be available, because they want to promote business in those areas.
Is that for profit as well as nonprofit, Jim?
Well, I would, again, it depends. I don't mean to be evasive. I'm sorry. Like I said, we're for profit, but there's some CDFIs that will do nonprofit and for profit. So
right.
You just have to, I hate to say it, but you got to do a little bit of research.
Yeah.
And then again, as far as preparation goes, having a really tight business plan and a 1 to 3 year cash flow, it's business 101, business banking 101, but you got to have that, and you want to be registered with the Secretary of State. You want to have your EIN. If you have partners, be careful, who you choose to be in partners, because your partner can take you under if they're not somebody with scruples. You know, you got to be careful there who you are in business with. But that's for starting up like that. And if you're looking for money, you got to do the research.
Yeah. From a grant standpoint, I think every municipality has a number of grants that are out there. Like Jim mentioned, you just have to do your research and find out what type of businesses they're lending to. And usually it's nonprofits, I think. For profits, I think, would be difficult to get a grant for. But you could contact your local SCORE office. They would be more than glad to point you in the right direction. Also, you can refer to the score.org website. There's a number of webinars that are out there, and quite a few of them talk about grants. I know locally we do a couple workshops about grant writing and how to proceed, and I'm sure other chapters do something similar to that. So all of those questions regarding grants, that's the direction I would take. So,
Yeah, let
I
me
would like
come
to
back.
kind of
Oh,
go ahead, Mark. I would just like
go
to
ahead,
kind of
Scott.
just kind of affirm what Jim had said too, because I think one of the questions you might ask me here later, Mark, that I was prepared to speak about was, you know, how do you as a small business owner, as an entrepreneur, as even an existing business owner, prepare for your banker and have that meeting. And to Jim's point, um, I have clients of mine that come in with nothing, that haven't put anything in writing yet. And it makes it very difficult and time consuming for them to get to the point where they can even apply for the loan. And then I do have clients that have gone through SCORE, many times even months of SCORE, or maybe even a year or two of SCORE. And they come in with binders and notebooks and all their tax returns, the 3-year projections, the business plans. And those businesses that are prepared, that have done their homework, have the business plan, the marketing plan, those are a lot more financeable. I've in my experience over the years, being able to do loans for them quicker and faster because they've done their homework and put in the legwork before coming to have a meeting with whatever or whoever is going to finance their business or growth.
So, Scott, let's shift away from startups. I mean, a business that's been around for 5 years or more. I mean, they're new to the bank. So, what do you ask them to supply usually?
I think it's pretty typical across the board. 3 years of historical tax returns, both personal and business, because most banks out there will at least require an individual that owns 20 or more percent of a business to supply a personal guarantee. So, in addition to corporate tax returns or corporate financial statements, 3 years of historical financial statements, and then there's other documents out there like personal financial statements that show, outside of your business personally, what kind of assets do you have, and what could you rely on if things, let's say things went bad for a couple months. And we know that business has its ups and downs. There are going to be months where you're doing well and the business can sustain itself, but there's going to come times where things might get a little lean or a little quiet, and you might need to rely on some personal assets to support the business through those lean times. So besides the historical financial statements, the personal financial statements, a lot of times, especially if it's even a new business or a fairly new existing business, I like to see an individual's resume, just to say, hey, what experience do you have? Or, I've worked my way all the way through a restaurant, from the dishwasher to the cook to the general manager. And now here I am, 20 years later, looking to start my own business. Anything that you feel would benefit you as far as obtaining a loan, educational certificates. I see a lot of times Customers will stick a whole pile of, degrees and diplomas and certificates that they've obtained, which shows that, they have a desire to constantly learn and grow. But there's a lot of good information that I feel that as a potential applicant or as an applicant that, anything that you can do to promote yourself, promote your business, make yourself look better on paper would be some recommendations that I would bring when you're meeting with your banker or your financial institution.
If we're dealing in a startup situation and we're really relying upon the strength of the business plan, I mean, what are the key elements of the business plan that you're going to look at?
I think you want to see, for me, it's have you put in the time? Because I've also seen business plans that are 2-3 pages long, and I've seen business plans that are 20-30 pages long. And I think, have you put in the time to determine where your revenue will be generated from? I mean, you can talk all day about, where you might have cost savings and what your expenses might be, but, are you able to identify in your market where you want to do business, where you can generate enough sales to support the expenses of the business, and for you at the end of the day to have, a positive net income and a return on your investment. I think really understanding your market, understanding your industry, those are very key. And, if you're able to, show to your banker or your banking team that these sales do exist out there, that there is a large demand for whatever product or service that you might be doing with your business, I think that is a very compelling story to tell your banker in the business plan, to show that once you go out on your own and start this business, that it'll be able to sustain itself long term.
Mm-hmm. Jim?
Yeah, my number one thing is when I read a business plan, is it realistic? And like Scott says, we love to see the resume. The PFS is nice, but when they're first starting out, a lot of times there's not a lot of assets that they have. But is it realistic? Number one. I mean, I've seen them where they're 2 inches thick, and somebody has a software program. You too can write a business plan, and they punch in little things here, and it spits out a bunch of gobbledygook. But if it's a realistic business plan, and if sometimes you can see the passion coming through the business plan, somebody that says, hey, I want to start a restaurant. Oh, well, why do you want to start a restaurant? Well, I like to go out to eat. I mean, not a lot of passion there.
Yeah.
So I think, is it realistic? Is the resume line up with, past experience? If you've been working in a sewer and you want to start a microbiology company, I don't know.
Yeah. Yeah. Well, getting back to credit and underwriting of loans, especially with startups, I mean, equity is what the owner is bringing to the table. I mean, just how much equity do you want, or is there a rule of thumb there?
Well, with us, I mean, again, like the lion's share of the loans that we do is what we call our scored program, and our aggregate on that, the maximum aggregate's 50,000. So sometimes we have business owners that have 2 or 3 loans with us, but our whole thing is we want to get these people over to Scott. We want to help them get their business started. We want them to get their credit score up. Instead of having a 5 or 6 year loan with us, it's say 7 to 9%, which is going to be a lot higher paying. If we can get them bankable, they can go over to Scott, and maybe he can give them a business line of credit if their financials merit that. But, our whole thing is we want to have them as clients, but we want to get them over to the local banker so that they can get, better programs, better rates. All that cross-selling that they do at the banks is great, with credit card processing, banking, checking, personal mortgages that they do. I mean, we want to get them into that environment, that atmosphere. So, and one thing I will say, for military, we do have a special where we can get a veteran, 7% interest rate. So that's a nice program for us. But one thing I will say before, hopefully we won't forget, but if anybody wants a link to apply for the 2% money here in Ohio, just let me know and I'll send that link out. And it's a quick application. It's $25. We do a credit report and background check, and it usually takes about 3 or 4 weeks to fund, but at 2%, startup 5,000, in business at least a year, 10,000, 615 minimum credit score.
Scott, getting back to you, relative to the issue of equity in a startup situation, do you have a rule of thumb there at Consumers National?
I mean, typically, are we talking like real estate or like equipment, Mark?
Well, startup. I want to start a restaurant or a pizza shop or something like that,
I mean, there's always going to be those minimum levels of equity that somebody would need to put into a project. Typically on equipment, you're talking 10%, real estate, 20 to 25%. But I'm always telling people, beyond your minimum required equity contributions that a borrower would need to make to any sort of lending institution, what do you have in addition to that to fall back onto? Because as I mentioned previously, there's nothing worse than starting day one without having any working capital. And that's where I think that, your equity, your contribution, your skin in the game is very, very important in startup lending and even longer term relationship lending. Because there are going to be those lean times that you'll need to lean back on what you have, instead of just trial by fire and every day not having any skin in the game.
Well, Jim brought up relationships, and I know you wanted to talk a little bit about that, Scott, the importance of the banking relationship.
And in my career, and I've been in banking now for close to 15 years, on the lending side for a little over 6 now. I've always worked in commercial credit my entire career before that. But the relationships matter, because you're going to get your first loan from, an ECDI or a non-traditional lender, or even a traditional lender, or somebody like a traditional bank like myself. And you're going to get your first loan and be successful. And your first loan will probably be something that is just an ordinary request. Maybe you're looking for, a vehicle, a truck, a trailer, a piece of equipment. And your banker might understand that loan request because they see it all day, every day out there on the streets. But then you're in a specialized industry and you need to sit down with your banker on the second or third loan request and ask for something that's maybe a little bit more specialized. And since you already have that previous relationship with your banker, he or she is able to better understand your business and provide a product or tailor a loan to what you specifically need in your business. Just high level here, I'm thinking about a few years ago, I financed one truck for somebody that is in the sanitation industry. And that truck has turned into many specialized loan requests because the business has grown, it's evolved. They're now getting into, these giant commercial roll-off containers out there, and those require specialty equipment. And since I've had a relationship with this client for a few years now, I understand where he's at and where he's going, so that when he sits down with me, I might even know ahead of time what he's asking for, where he's going, and it helps me better understand where he's been and where he's going. And it gives my underwriters and my loan decisioners a lot of confidence as well, too, knowing that he's had a successful relationship with our bank historically.
Thanks, Scott. Tom, are you still on the line?
Yeah, I'm here. Yep.
Great. Did you want to weigh in on anything that's been said here with regard to personal credit, et cetera?
Well, like I said, we rely on our lenders to kind of, do that and to kind of determine that it's okay. So we kind of, trust our lenders to do that. Basically you want to have good credit or, okay credit or improved credit. But I guess the SBA just kind of relies on the lenders to make that determination that it's, good enough.
Right. And you do have that one program for small loans that the SBA does credit score, right?
Right. We got like loans, what, 350,000 or is that 500,000? Credit where it's credit scored, where basically if you put it through, it takes your personal credit, business credit, all these different factors, and determines your credit score, which means that you have ability to repay. So you can that's good enough. It's kind of like credit score. I think it's 155, however they come into that figure there. But the smaller loans are credit scored. We just get a question about scoring 800s. Like I said, you can have poor credit, but then you improved it and you're paying as agreed, and then the bank lender determines that you're okay now. So that's one of the reasons they use SBA, because things might not always be perfect there. Maybe the collateral's short a little bit, the credit, things, different factors they use SBA for. Like I said, one big factor is always collateral. If the collateral is considered short, but everything else is okay, that could be a perfect SBA type deal.
Sounds good. Hey, Jim, if a borrower does resort to non-traditional, shall we say, online lender, I think, what advice would you give there?
You mean if they talk to us, or if they talk to like Scott, and maybe we couldn't come up with a loan for them?
No, well, I'm thinking about Blue Vine and
Yeah,
the old Cabbage, etc.
Yeah, I mean, you've got crowdfunding, you've got all different types of programs out there. You got angel, and I mean, you got guys that, you guys have seen Shark Tank. They like Mr. Wonderful. He wants a piece of the business. But there's some guys, they want 51%. And they take your idea. But no, I would say you have to be careful. And again, merchant cash advance, stay away. It's really, I mean, there's a lot of money out there available, but you're looking at a horrible payback. If you calculated the interest, some of those interest rates are way above usury rates. And I just, you got to really be careful. So if you sometimes some of your local bankers like Scott or myself, we could refer you to somebody if you're here in Ohio that maybe that you could talk to. I mean, you had asked the question, and I'm sorry, Mark, I didn't finish answering it about equity. Of course, you guys are familiar with UCC filings, and so you know that most lenders on the commercial side are going to do a UCC filing on a,
Like what, all business assets?
Yeah, yeah, yeah. Whether it's collateralized by a commercial building or by a residence, um, the UCC filing, and then the other thing you got to think about is the note. There's a thing called a cognovit note, and the cognovit note basically states that the lender can get a judgment against you without you knowing it, and that's what's on most commercial loans today. So, um, when you talk about equity, uh, with us, sometimes we will do investment property if it's a different type of loan, and but the main thing is we're, again, most of the stuff that we do is unsecured, other than the UCC filing, and there's just, when you go online and you're looking for money, it's sometimes I feel bad for business owners, because what a business owner wants is they want what Scott has. They want a business line of credit. And if you're just starting out, or if you have a credit score that's low, or you don't have somebody that you can collateralize, you're just going to get turned down over and over again. And then, so a lot of business turned over to these loan sharks, these MCA loans. So I would be very, very weary, of some of the online things that are available.
Okay.
Yeah,
Hey, Jim,
I
what's
recently.
I'm sorry. Go
Go
ahead.
ahead, Ed. No, go ahead, Ed. It's fine. I was just
I was
going to
just
kind of
going to ask
reiterate
Scott,
what you
what's
were
the best
saying
number
about.
I was trying to get hold of. What's the best number to get hold of you, Jim?
Oh, my number's 216-912-5665.
Okay.
Yeah, and I saw in the chat they put some number in there from Keokuk, Iowa, or somewhere. I don't know.
Yeah, that's an Ohio number. So I think
Okay,
if
yeah,
you're in
my number's
Ohio,
two.
that's
Yeah,
a
I'm
good number for him
216
to call.
912 5665.
Okay. What about minority business and or a woman-owned business? Is there any requirements from an SBA standpoint? Tom?
I think you're the one to answer that question, Mark.
Okay, what was that question there? I didn't quite get that.
Is there any requirements for like a minority business or a women's owned business?
No, I mean, it's just that's actually a bonus if you are, but it's basically the same requirements. We try to help more women business and more minority businesses, but basically
What are
we try to support them.
Okay.
what are some of the current specials or programs, Tom, that exist out there for female and minority-owned businesses? Is there anything that the SBA is doing special at the moment to attract and grow that portfolio of the business?
Yeah, well, we have, like I said, we have like a women's business center here in Cleveland. We try to promote it. The loan programs are basically, I think, pretty much the same for everybody. Like I said, we got the Veterans Advantage, but we're always promoting that. We got a women's business center. We got minority business centers. We got the MBACs, Minority Business Assistance Centers. So we're always trying to promote that. But I don't know if there's any actual programs other than the veterans, but we make an emphasis to really try to, help out all we can by kind of our resource partners providing help, with their plans, business plans, things like that.
Okay.
Yeah,
Thank
I
you.
would only offer that the state of Ohio does have some programs geared to women and minorities, and usually you have to get certified under the state's program. I'm not sure if other states have similar programs. Maybe they do, but that's where you should probably look in that regard. Scott, getting back to online lenders, on deck, things like that.
Yes.
Have you seen any requests from people coming to you saying, "Hey, I got to get out of this high interest debt. Can you help me?"
I feel like I did a few years ago. I haven't of late. But to Jim's point, um, it's not so much the interest, or it is the interest, but it's also the frequency to which sometimes these lenders make you repay back debt. Because that frequency really hurts your cash flow and timing of when you're able to pay things back.
Scott, what do you mean by frequency?
Weekly, I've seen daily.
Wow.
But like repayment.
Yeah.
Like
I mean, the
on my
ordinary
typical
bank loan, that's a monthly payment, correct?
on my yes on my typical bank loans, it's a monthly repayment, and for the lines of credit, it's just the outstanding interest from that previous month, and if it's a term loan, just whatever the prescribed principal and interest of the loan may be. But there are lenders out there um, that do lines of credit or term loans, and every Monday the payment gets ACH out of your account, and if it's not there, you don't have the ability to utilize that cash that you have sitting in your account to pay a vendor or pay an employee. So not only do I see I'll use the term predatory lending out there, um, from non-traditional sources, not just with the interest rate, but they might be wanting to get you to pay them every day or every other day, especially on factored receivables. Um, I've seen some factored receivables take money out of clients' accounts pretty frequently, almost daily, just to get the repayment back, which really can hurt an operating business's ability to keep cash in the business and pay bills traditionally.
Mm. Hey, Tom, we don't do investment real estate at the SBA, but I was wondering how Scott and Jim feel about investment real estate, which is to say, you as a borrower simply want to buy a building and lease it out to an unrelated third party.
I mean, investment real estate. I'll chime in here. Investment real estate is a big piece of my portfolio business as well as our bank's portfolio business. And I sit here in my office today, and I look out, and there's a retail strip plaza that our branch sits in here, and that is investment real estate. And there's always inherent risk in investment real estate. And you can't directly underwrite the tenants that occupy space in those buildings. But you can mitigate the risks of investment real estate through bigger equity contributions, which typically you see most lenders, less equity is required or needed on an owner occupied facility, and more equity and more cash into the deal is required on a non-owner occupied facility. So equity is a big piece, as well as amortization of the loan is a big piece. And just and leases, are they short-term leases that you are signing to rent your building or your facility? Are they longer-term leases? Definitely a lot more risk in investment real estate or non-owner occupied real estate than owner occupied. But there's still a lot of need and demand out there for investment real estate, and it's a call that I frequently get almost daily to take a look at an investment real estate opportunity out there in the market.
Hey, Jim, I don't think ECDI does any real estate transactions, do you?
We try to stay away from it. We will, if again, depending on case by case basis, we may lean a residence, we may lean an investment property, we may lean a commercial property, depending on the type of loan that we're doing and the scenario. So yeah, but on the investment side there, the DSCR loans, debt service coverage loans that are out there, I've got one of my clients now. He's got a 32 unit he's doing. He's got a 52 unit he's doing. They're 100% rented out.
These are apartment homes?
Yeah. So basically, usually a 1.2 debt service coverage, basically what's coming in versus covering, what the nut is, the total cost monthly. And so there's for 1 to 4 family, I could give you 20 different lenders that are doing debt service coverage. For investment properties 1 to 4, and then anything above that, I've probably got about 20 different lenders I could refer people to that do debt service on investment properties, multi-unit, not owner occupied. And I know if SBA is going to fund the deal, they want the owner to have excuse me if I'm wrong, Tom, at least 51% of the building, as part of their company being in there or what have you.
Right, that's for sure. Yeah.
Yeah.
New construction would be like 66%.
Okay.
Ed, did you want to jump in with a question or two?
Yeah, the question, one of the questions I have is, okay, I have a business and I think I need a loan. I mean, what is it really the amount that you think you need that determines where you go to start this process? Whether you go to a micro lender or to a traditional bank? I mean, what's the cutoff? Anybody?
I think Jim, I mean, you have limits, Jim, don't you? You have a limit on how much you can loan out to somebody through a microloan, correct?
Yeah, we do. But, we've got on the other side of that, we're getting ready to close a $2 million transaction. But there's county money that's involved. And so,
Yeah.
again, our wheelhouse is.
So, Jim, you can partner up with other lenders in a deal.
Excuse me?
You can partner up with other lenders in a deal then.
Well, it's not that. It's sometimes there's grants, sometimes there's funds that come in that we have different pockets of funds that come in that we in our allocation. Sometimes if I might have say $50,000 and I might have allocation from 4 different lenders with 4 different rates, and then we do a blended rate. And so, but again, that's money that's been given to us that we lend back out. So yeah, I guess you're right. Yeah, it could be with other lenders, but we're not like looking at doing like $1 million loan and then maybe going over to S&T or consumer and say, hey, you want to do, nothing like that. It's usually stuff that we fund through monies that come in to EDC. And there's the one thing too I want to point out. Tom was talking about the women's business centers, and in our location in Cleveland, for instance, my office is right in with the WBC, the Women's Business Center. We've got 5 of them in here in Ohio, and a lot of the people, just like what SCORE does, and some of the different. There's a couple entities that help business owners. They basically work with them to develop their business plan, to develop their cash flow analysis, different educational programs that are available online, some that are in person, like Harv Smith, one of the guys that I work with at ECDI. We did a business boot camp down at the Akron Library. I think we had about 12 people there, people that are wanting to get in. And so we did a business boot camp. And so we've got a lot of training available for startups and people that are basically, they've got an idea, they need to help somebody germinate that and get that into a plan and so forth. So the WBC, we send a lot of referrals to the WBC. And I appreciate Tom bringing that up, because I did want to do a plug for them. They help a lot of people in the Ohio area here.
So how important is a business plan when they come to you with a loan, with a desire for a loan?
If you're talking about ECDI, if we won't do the loan, if you're a startup and you don't have a business plan, we won't.
Okay.
We'll refer you to the WBC. Will refer you to SCORE or someone else like that.
Is that pretty much the same thing for you, Scott?
Yeah, and I'd previously talked. Yeah, absolutely. And I'm a big proponent of SCORE, because you guys at SCORE, all the counselors that I've had interaction with, you guys do things the right way, and you make sure that clients are checking the boxes and getting the proper documentation, the business plan put together. Very important.
Okay. Well,
We have
it
a question
is.
in the chat concerning, well, I have two multifamily properties with balloon notes to refinance next year. Are there any SBA programs that might help me avoid doubling my interest rate when I refi? Tom, did you want to chime in on multifamily properties?
Yeah, that's the area that we don't get involved in. We just don't do that. Real estate. That are like that. That could be maybe something Scott could do, a multifamily there. Can you do that, Scott?
I can absolutely do multifamily. And the rate environment is interesting that we're currently in. And I would say if your balloon note is not coming due for another year, that maybe just hold on to see what rates do here in the next 6 to 12 months. But yes, we do a lot of multifamily lending. It's something that really is a core backbone of our portfolio.
Let's say, Mark, let's take a look at what questions haven't been answered right now. It's about almost a quarter after 12, and just want to make sure we've answered everyone's questions.
Well, I will say one thing further in what Tom said. With the SBA loans that I've done and that I'm seeing out there now, usually the lender will take a 10-year treasury. So if the 10-year treasury is say 4.25, it might be a 10-year treasury plus, it could be like 5% plus 5.5, sometimes even 6, depending on the risk. But and the amortization can be anywhere from 20, 25, even 30 years, depending on the lender. And so it's a variable rate. So, whenever the 5-year, the 10-year treasury goes up or down, your rate's going to go up or down. Okay. What we're hoping is that the 5-year and the 10-year is going to go down. With new policies that are coming out, but who knows? It's like rolling the dice. But that's usually what you're going to see on an SBA owner occupied. Sometimes there's like Scott was saying earlier, sometimes there's equipment involved, sometimes there's working capital involved, and you're buying real estate. So there's a lot of different variations that are available. And a lot of your local bankers, and even Scott, Huntington is correct me if I'm wrong. I think they're the number one SBA lender in Ohio, at least. And
Yes.
They're a good place to go for SBA. A lot of banks don't do SBA. They don't, they want to do their programs. And I don't know. Do you run into, Scott? Do you guys do much joint lending with different banks if the volume and the size is larger than usual?
Yes, we do participate. We do participate quite a few loans with other institutions. I'm not trying to. I don't think that we participate too many SBA loans with any other institutions, but definitely loan participations are something that we do because our bank is limited by our capital and what our legal lending limit is, and there are obviously much larger institutions out there that are willing to partner with us. If we were looking to finance a 15 or 20 or $25 million project, we would need a partner. But we've even partnered with other institutions on smaller loan requests just to diversify some risk in our portfolio.
Okay.
Yeah, I do see a question, Ed, about what are the government-backed loans qualifications? Well, I guess it depends on what sort of government-backed loan you're going for. SBA has its policies, but United States Department of Agriculture, Rural Development has their own policies. So it really depends on you, the borrower, and who you're dealing with and what is required. Scott, do you ever dabble in USDA rural development loans?
I am not very educated on USDA loans, Mark, especially the rural development. I know that those loan programs that the USDA offers are very advantageous. Are very advantageous to clients, but I have not personally done any of those. I've looked into a few of them. I know and this probably doesn't apply to anybody on the call here today, municipalities, city government, quasi-government organizations, those USDA loans are real attractive because we had a local municipality here in Stark County wanting to do an expansion to their police and fire station. And I believe the USDA came in and was able to do like a 40-year term. But that's something that I personally don't deal a lot with. I know they're available, but I don't have a lot of knowledge or education on those loan programs.
Jim, what about in your background?
Not a whole lot on the commercial side, but we do. And I haven't done any yet since I've been with ECDI, but every business owner that we run through our system, we do a property search for USDA funding. So we do have monies from time to time available, and I believe it's case by case. But I don't have as much experience as I do have with the SBA monies, but we do some USDA funding at ECDI.
Okay. Yeah, Jim, your remark just triggered something in my mind. With respect to USDA, I know they had provided funds for different organizations to do workshops and seminars on business succession. And although, much of our audience might be in a startup situation, eventually, after they get into business, they're going to have to be thinking about business succession or exiting the business. And I was wondering if you or Scott had any thoughts along those lines as far as succession planning is concerned.
I'll talk about that here, Mark. Actually, recently at Consumers, I went through I took some education, got a certificate here, and in January earned my Certified Exit Planning Advisor designation, CEPA. And nationally, there are 7,000 of us here across the country in all various industries, with one goal in mind of driving value in businesses and getting business owners to transition their business, whether via a sale or a generational gift or an ESOP. There's many different varieties of a business owner transitioning a business, but something like, I forget the number, but it's like 60% of businesses that are currently active today in the next 10 years are gonna transfer to a different owner primarily driven by baby boomers shifting ownership to millennials or Gen Xers. We're going to see this $10 trillion wave of business transitions here in the next 10 years. And, it's important that local businesses, community and small businesses remain in the economy, as something like small businesses are more than 50% of the GDP in this country. So probably most of the people here on the call today are looking to grow and start their business. But it's also important too, though, because for most small business owners, as much as 80, 90% of your net worth will be tied up in the value of your business. Most small business owners that I talk to aren't actively contributing to a 401k or an IRA or traditional retirement vehicles. And they use their business as their value, their driver of wealth. And if you're a business owner and you have put 30 or 40, maybe even 50 years into growing your company, and there's value there, and you are not able to access that value when you want to step away, what was all that time and effort good for? That's why I think it's important to, as you're growing your business, as you're scaling your business, to always think about, if I had to sell this today, who would I sell it to? Is there a strategic buyer out there? Does ESOP make sense? Does private equity make sense? Those are all very important, I think, as a business owner to at least think about as you're growing and developing your business.
Scott, you bring up something relative to SBA, and Tom, are you still on the line?
Yeah, I'm here. Yep.
I mean, we can do business purchases at the SBA, right?
Yes, for sure.
Change of ownerships.
Yes.
Did you want to talk about that a little?
Yeah. Like I said, we're gonna do business purchases. You do have to have like at least a 10% equity in. Can you hear me? Equity injection on business purchases, but it's something we can do, because people a lot of times they want to sell their business, they want to retire, and then want to sell their business, and then somebody else wants to buy it. Sometimes it may be an employee, right there, and that's be a good SBA loan situation that we could support.
Sounds good.
Hey, Mark.
Yeah, Ed, did you want to wrap things up?
It's about 12:24. I think we need to wrap it up here.
Okay, very good.
But I wanted to thank everyone for joining us, our panelists, our moderator, and all of you that joined. We had a pretty healthy crowd. If SCORE can be of any help to you, I've plugged in our website a number of times. Please use us. We're free. We're there to help you. So please take advantage of us. So anything else, Mark, you want to say?
No, I think it was a very good discussion, and I hope everyone profited from it.
Yeah. Okay. Thank you all. Hope you have a good balance of week. So long.
Thanks.